Hey everyone, welcome back to Corporate Decoder, the place where we see if companies are actually doing business or just trying to look busy. Today we're diving into Artelo Biosciences' latest report, and let's just say it's a bit of a game of musical chairs with their deals. Alright, so Artelo Biosciences, a company you might know for its common stock trading under the ticker ARTL on the Nasdaq, has some interesting news. They've been busy, but not necessarily in the way you might expect a growing biotech company to be. It seems Artelo had a plan to raise some cash through a securities purchase agreement back in August of 2025. They were supposed to sell a bunch of shares and some warrants, which are like options to buy more shares later, to certain investors. This was all laid out in a deal they announced. But here's where things get a little bumpy. Just a few weeks later, on August 19th, they announced they were terminating this whole agreement. Think of it like agreeing to buy a house, signing the papers, and then a week later saying, nope, not happening. This termination means that the original deal to sell shares and those all-important purchase warrants is now null and void, as if it never happened. Both sides, Artelo and the investors, have essentially agreed to forget the whole thing ever existed, except for a few minor details that still matter for the termination itself. What's really interesting here is that they've released each other from most claims. However, there's a little exception. If Artelo broke any promises they made in the original deal documents, particularly related to some earlier private placement back in June, the investors might still have grounds to pursue claims. It's like saying, we're done, but I can still come after you if you lied to me before we even signed this deal. And to top it off, Artelo had to pay $50,000 to the investors' lawyers for their time spent on this deal that ultimately went nowhere. No termination penalties were due, which is good, but everyone still had to pay their own costs for this whole ordeal. But wait, there's more! Artelo also had a consulting agreement with a company called ABK Labs. This was for strategic advice, especially around digital assets. And in return, Artelo was going to give them warrants to buy a certain number of shares. Just like the other deal, this consulting agreement met an early end. They agreed to terminate it effective a few days before the official termination announcement, meaning the services and any future warrant rights just stopped. In this case, ABK Labs basically gave up all their rights to those warrants. It's like having a coupon that's about to expire and just throwing it away before it becomes useless. No money exchanged hands for this termination, which is a bit cleaner than the previous deal. These terminations and the details surrounding them are laid out in official documents filed as exhibits with this report. Think of them as the detailed divorce papers for these business relationships. And who's signing off on all this? The report is dated August 2025, and it's signed by Gregory D. Gorgas, the Chief Executive Officer and President of Artelo Biosciences. Now, looking at this filing from a broader perspective, Artelo Biosciences seems to be in a state of flux. They're signing deals and then quickly unsigning them. This frequent tearing up of agreements can signal a few things. Perhaps they're having trouble securing funding on favourable terms, or maybe their strategic direction is changing rapidly, making these initial agreements obsolete. The fact that two separate significant agreements were terminated within weeks of being announced raises a yellow flag. The $50,000 payment for legal fees on the terminated purchase agreement, while not crippling, shows the cost of these aborted deals. The mutual release clauses are standard, but the carve-out for potential breaches from a prior June transaction suggests there might be lingering issues from even earlier in their financial journey. For investors, this kind of activity can create uncertainty. It's hard to plan for the future when the building blocks of future plans are continuously being removed. While no termination penalties were mentioned, the opportunity cost of time and resources spent on these deals that didn't materialize is real. It might be that Artelo is being cautious, avoiding bad deals, which is a positive sign of good management. However, if this becomes a pattern, it could indicate deeper issues with deal making or financial stability. The termination of the consulting agreement, while less financially impactful, also suggests a shift perhaps in their focus on digital assets or their approach to advisory services. It's a sign that even smaller arrangements are not immune to these sudden reversals. In conclusion, Artelo Biosciences appears to be navigating a complex and perhaps uncertain path. The ability to terminate agreements gracefully and without major penalties is a sign of solid negotiation. But the frequency of these terminations warrants close observation. Investors should watch for more stability in their announced business activities and clear signs of progress rather than deal-making and unmaking cycles. The company's direction seems to be in flux, which presents both risk in terms of execution and opportunity if they can find the right stable path forward. Alright, that's our breakdown of Artelo Biosciences' latest filing. What's your take on these numbers and what they signal for the company's future? Do you think these terminations are a sign of good financial discipline or a red flag of instability? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description to continue the conversation. Thanks for watching. See you next time.